Excited to introduce our host for today's event, Jane Madgwick. Jane's connection to peatlands runs deep. As CEO of Wetlands International for 19 years, she has been instrumental in bringing global attention to the causal link between the drainage of peatlands and massive greenhouse gas emissions, stimulating research, policy change and incentives for peatland protection and restoration. As a distinguished ecologist for over 3 decades, she's got experience spanning science, policy and practice of wetlands and water management. Between Wetlands International and Plant Life, Jane has also served as the first executive director of the Global Common Alliance with a focus on connecting resilient ecosystems and livelihoods. Please join us in welcoming Jane Madgwick. Over to you.
Thanks very much. So good afternoon and welcome everyone. Thanks so much for joining us for this launch of a new roadmap and as an ecologist working at this interface of water, nature and healing, paths again and again to peatlands around the world. So the all-important interface between the ecology, economics of peatland restoration. And this is the interface where the innovative work of the Landscape Finance Lab and its partners helps to bring solutions that are necessary to humans and natural systems. We're on West journey already. The scientific and economic case for restoring peatlands is now unequivocal and considered essential for tackling the twin crises of climate change and biodiversity loss, and is playing a vital role in human security. And we're no longer working in the dark. Practical experience have taught us how to have commercially viable polyculture systems. So none of them met but despite all of that, and some are still literally going up in smoke and down the drain, mostly because they're grossly undervalued. So restoration efforts are too small, fragmented and short-term. And that is mirroring the nature of the finance that's currently available. So in this, I'm focusing on how to elevate peatland restoration and scale required, reflecting their true role as critical natural infrastructure. We're going to zoom in on what might be possible in Europe and discuss a pathway towards peatlands becoming a specific institutional asset class. Such a shift could stimulate and sustain the private sector investment that is urgently needed. So the discussion paper argues that this is a significant opportunity, but also that unlocking it isn't that straightforward or simple. So I want to hear about the changes that will be needed on the finance models and mechanisms and overall on the market architecture. A particularly exciting proposition that's under discussion is that water could provide a second, quite durable revenue long and would be transformative. So in a moment, Matt Robinson, the main author of the report, walk us through the key recommendations. After that, I'll open the round table where we'll hear perspectives from key stakeholders, potential users and investors in natural infrastructure. Right after the round table, we'll have a 15-minute Q&A. In the Q&A chat ready for this session. You can see we've got a beautiful diverse audience covering a range of sectors and geographies and including many who are working at this phase of nature and finance. So I'm looking forward to a lively deep dive discussion. And now I would like to hand over the roadmap.
Thank you very much for joining. So I'm Matt Robinson from the Landscape Finance Lab. And I wanted to write this report because peatland struck me as obviously one of Europe's great natural assets, but also one of its most underfinanced. And I wanted to bring my background, which is in impact investing, to look at what market architecture might be built. The departure from of the report is a relatively simple one, that peatland restoration needs capital at a scale that's beyond the level that philanthropists and governments can provide. It looks across 8 archetypes of peatland, which are just a small subset of the total European peatland area. And even then, and even only the next 10 years, the report estimates that well over 2 billion euros is necessary for restoration ambitions. That's an amount that's beyond the pockets of grant makers alone, and conceivably only repayable private capital, I think, can step up to that level. But today, despite the discussion of nature markets, there's actually very little repayable private capital financing peatland restoration. Yes, there are companies buying credits, but that's not the same as financing the underlying restoration asset. So the big exam question of this report is really, can private repayable finance step up to back peatland restoration? And if so, what needs to change in the market to do that? So to answer that, and this is on the right-hand side of this slide, the report deliberately takes a high bar, which is, what the requirements are of institutional investors if they were to think about financing peatlands. So institutional investors are the people who steward our pension funds and our life insurance policies. And if you can build a market with institutional investors as the end game, you can be confident that others, like development banks and impact investors, are likely to move earlier and faster. And institutional investors won't finance or allocate capital to something that's simply ecologically important. They'll ask three broad questions. The first is the impact credible? Second is, are the returns sufficient? And the third is, can risks be understood and managed? And here, to assess this, the first thing is, I would say impact is not the problem, the barrier stopping institutional investors backing peatlands. The science is strong, the ecological case is strong. We know they're proven assets for climate, water, biodiversity, and so forth. The second test on returns, interestingly, I think peatlands are closer than people might assume. The reports run discounted cash flow analysis, which basically combining the costs and the revenues of peatland restoration, and found that many peatlands already approach viable project level economics, which I assess to be around 7% annual rate of return. And in fact, lowland peatlands with their high abatement rates, carbon abatement rates, are even higher than that. So the big barrier is actually risk. And there are three types of risks that need to be thought about. The first is the certainty and concentration of revenue associated with peatland restoration. The second is the risk of small scale and fragmented investments. And the third is a structural one, which is the kind of instruments that are used to finance peatlands, and I'll come back to that point. The good news is that I think all of those risks can be significantly overcome in the next few years, and let me go on to say why I think that. So if we go to the next slide. The first big shift, and there's three big shifts that we need to overcome these risks. The first big shift is on revenue. As I'm sure many people on the call know, the big revenue stream at the moment with peatland restoration is around carbon. And carbon will remain essential to peatland restoration, and it can get stronger than it is even today, particularly if corporate demand for the high fidelity, high integrity peatland credits strengthens, which can happen, particularly if the treatment of those emission reduction credits evolves in things like the Science Based Targets Initiative. But I don't think carbon alone, even with those strengthenings, can carry this market all the way to institutional scale. And I think, as Jane mentioned in the intro, the big move is to build water credits or water benefits as a second anchor revenue stream. Water is actually arguably different to carbon because the benefits accrue to identifiable and local beneficiaries right now, utilities, infrastructure operators, and insurance companies. And these companies are already incurring costs for running the grey infrastructure that compensates for degraded nature. So there's a great potential for water markets to emerge to pay for those benefits. And I think there's a big analog with the way electricity markets have developed, where you can get payments for reflow and recharge and flexibility. It's a big opportunity, not just for peatlands actually, but for a lot of nature-based solutions. Also on revenue, governments can play an important role, and I recommend in the report that governments across Europe move away from the current traditional capex grant model of support that they offer, and more towards mechanisms that improve revenue certainty. So this could be things like floor prices or contracts for difference or outcome-based payments. These are contingent mechanisms, and they might not actually cost the taxpayer more money than is currently spent today, but they will do a lot to accelerate the bankability of peatland projects. So that's all around shifting the revenue certainty. On scale, the trick is to aggregate the current sort of quite small scale nature of peatland projects, which are it's too difficult for institutional investors to look at one by one. The good news is there are proven aggregation models of different sorts evident across Europe that we can learn from, whether they are catchment-based management authorities, whether they're cooperatives, whether they're private operators, developers aggregating their own projects, or public-private partnerships. And doing this will help diversify, standardize, lower transaction costs for investors. And the final shift is a structural one, and this is a tiny bit of financial jargon, but I recommend that in the long run, peatland finance moves to what's known as a project finance structure. This is a very standard way of financing infrastructure all over the world for over 100 years, and its benefit lies in tying investor risk more closely to the cash flows of a project and less about the myriad of risks involved in owning wider land holdings or financing companies. Because risk is easier to understand, it lowers the cost of capital. Because the cost of capital goes down, more peatland projects get viable. Project finance is an asset class that today is worth trillions, so we know when peatlands start using these type of structures, they're ready for takeoff. So those are the shifts that are needed, and in the roadmap section of the report, I say a little bit about who needs to do what to affect those shifts. And just to give you a flavor, because there's a kind of a lot of ideas, but one key group is obviously the bodies that provide the standards and steward the voluntary carbon markets. I think they can do things like look at interoperability between the myriad of markets across Europe, to build a common code of data transparency. And as I mentioned in water, there's a big opportunity for someone to step in to define the benefits, valuation and attribution, what contracts look like, etc., to be a water market maker in effect. So that's one key group. Project developers are obviously another critical group. As hinted at, they can move towards aggregation structures, eventually more project finance structures. And collectively, they're probably the best group to go on a kind of demand driving PR campaign to raise the profile of peatlands across the would-be buyers of ecosystem services and sort of address this slight sort of Cinderella effect they have vis-a-vis, say, forests and woodland. Buyers are completely critical because they provide the revenue underpinning the market. And I think the big shift there is for them to anchor demand with longer term commitments. CSR grants are absolutely great. Thanks very much. Long-term offtake payments for benefits, including water, that's even better. That will build a market. Governments, I've mentioned, I think the key opportunity there is in rethinking how they use the same amount of subsidy in a way that's smart in terms of building markets. And investors and development banks, they have a key role to play. And the key thing here is not to wait for a perfect market to emerge, but to get involved in creating one from now on. So, hopefully this roadmap report is not just a diagnosis of how the market can be strengthened, but also a set of practical actions for delivering that. And I hope in the discussion with our great panel, we can get into how it's absolutely it's coordinated. And the final thing I just want to say is that, look, I think the prize is a really big one, and I think we can shift peatlands from the more bespoke grant-dependent conservation projects that have got us so far already, but much more towards a form of green infrastructure, long duration, investable risk return, and that is ultimately what this report's all about. So I'll hand back to, I hope that gives you a quick summary of the report, and I'll hand back to Jane and I think the panel we're about to have. Thank you.
Well, thank you very much, Matt, and thank you for explaining something that's really very complex and a lot of work in a very clear way, and really setting out all the different elements. So congratulations for that. I think it's this is a very much needed piece of work, and it's presented, I think, in a spirit of what's called a discussion paper. So we're here now to really discuss in a roundtable setting different perspectives from those who may invest, may move this roadmap forward, and who may be struggling with how to bring restoration to scale. So welcome to our distinguished and very knowledgeable speakers. So we've heard from Matt that the barriers are no longer really ecological or technical or even economic. There's a lot of structural barriers to overcome, and a lot of different players are going to be needed to work together to make this happen. That's kind of runs through the whole presentation and the report. So we're going to hear from people working in different parts of the regulation, the supply and demand on natural infrastructure, who have experience of the case of peatlands. And we want to hear what you see as important, and also what's possible, what's feasible to implement this roadmap. So I'm going to start with government, with the public sector, and go to Sophie Chapman, who is heading up the peatland policy work at DEFRA. Welcome, Sophie. Thanks for joining us in the UK. Perhaps you could say, firstly, how important is peatland restoration for the UK government, and what do you see the role in government in this context? What levers can you operate? And how does that play alongside the ambition to bring in private sector investment?
Sure. Thanks, Jane, and hello, everyone. It's really, really great to be here. So in terms of peatland restoration is, government is committed to peatland restoration. I think that's clear from the recent land use framework that was published, that really majored on peatland restoration. It's from the environmental improvement plan that was published at the end of last year, from the carbon budget delivery plan. I think all of them, we have a commitment to restoring 280,000 hectares. I should clarify as well, I only cover, peatland is a devolved matter, so I only cover England, and obviously this is a major thing in Scotland in particular, but also in Northern Ireland and Wales. Well, there are multiple reasons to support peatland. In terms of cost benefit analysis, it's really strong. It's a no-brainer, really. Our biggest driver at the moment is around climate. We are a part of the legal carbon budgets, but we're also, peatland is a key part of our legally binding Environment Act, the various Environment Act biodiversity targets. It's also, very, very clear benefits for water, particularly water quality, and on slowing the flow on potential flooding events. I do seem to recall, though, and I think it's mentioned in the report, I think the ONS, Office for National Statistics, found that to restore all the peatland required in the UK would be between, I think, 8 and 20 billion pounds. I think it's highly unlikely that we will, the Exchequer, given all the demands on public funds, that the Exchequer will have that level of funding over the next 30 years. So we really do need to look towards leveraging in private finance into this area. So I really, really welcome this report. What's really, really great is, as well, as to see a specific roadmap for a potential roadmap for peatland, with sequencing and so on. The government has started to make inroads into leveraging private finance into the environmental space. You'll have seen hopefully seen the publication of the BSI voluntary nature market standards. I think was it yesterday or the day before? So very, very timely. On peat specifically, we have started trying to make space for private finance. Obviously, we have the peatland code, our recent Nature for Climate Fund grants require 25% of non-Exchequer funding, and landscape recovery, which will be one of the future key vehicles, will require the same. I also know the Environment Agency are doing a lot to leverage in water company investment by the WINEP. So maybe Claire will say a little bit more about that. And we have seed funded some aggregator models as well, such as the National Parks Green Finance Accelerator. And then we've got the publication of the voluntary nature market standards as well, which I think hopefully will really, I think one of the other panel members described it as earlier as a kind of tedious but very, very necessary part of the whole picture. I think they really, really should help to bring that integrity and make aggregation easier as well. I mean, for me, the main big next gap is around revenue stability, which I think is where it is, necessary for government necessary government intervention. So I look forward to discussion on that.
Thanks very much, Sophie. Might be that some of the other speakers have some thoughts on how government can increasingly play a role. And I want to turn to Matthew Hay next, who's Natural Capital Manager of Nattergal, which is a company who's pretty much a pioneer in commercialising nature restoration and some innovative projects at scale, like the Nep estate and in the fence. So, Matthew, love to hear from you how you see the roadmap and what you feel really needs to happen to open up these financing pinch points for getting new ambitious projects moving.
Yeah, thanks, Jane, and hi everyone. I think the roadmap is brilliant because I think we almost need to imagine the future we want to create and bring it into being, and I think doing that in a structured way is incredibly helpful. The main thing which Matt has already alluded to that is really required if we want private investment is certainty of revenue, because that's the way the private sector works. You put money in and you get a return on your investment. And so that, coming at that question of revenue certainty is absolutely key, and we need to do it in lots of different ways. And I think it's important to acknowledge that government are already doing certain things. On one of our sites, we're funding peatland restoration in part through biodiversity net gain. So the creation of that compliance market is actually helping to drive private finance into peatland restoration. But I think we need to go much further. I think we should be under no illusions that relying on voluntary mechanisms like the voluntary carbon market, while they're very important, that's not going to get us far enough, fast enough. And we're going to need, as Matt alluded to, other anchor revenue streams. And I see water as a really important one going forwards. And then once you've got a greater certainty of revenue and a greater understanding of how these revenues play out and what services peatland managers are being paid for, well, then you can start to get into the kind of aggregation and the project finance structures and looking at mechanisms like contracts for difference, because there's a more standardized market rate that people are being paid. So yeah, look, I think the report was hugely important. I think we need to come at this from all angles. Everyone has a part to play. And the way we're going to make this coherent is if all of the different components in this ecosystem, the developers, the financiers, government, and the buyers, if we all talk to each other, a lot, that's going to be what we need to do to land somewhere quickly that's going to be workable.
Thanks, Matthew. I mean, one of the three big shifts that Matt underlined was on scale and the need for aggregation of projects and players in this field. And, I think there are many organisations, some charities, some companies, some a bit of a hybrid developing now in this field. What do you see as the prospects for some aggregation there to actually combine efforts and therefore make this transformation easier?
I think aggregation will happen organically once the demand for the natural capital and other products is there. I think as soon as you've got revenue generation, you're going to see a lot of investors wanting to get into this space. And as soon as there's a lot of investment appetite, it'll become much easier to make a business case that more and more people feel confident in. And you'll just see aggregation start to happen, just through economic rationalization and trying to make these things efficient. So, I'm a broken record. I always just bang on about demand and never losing sight of who is paying for the services that peatlands are providing. Because unless you crack that, then you do not get the investment. And as soon as you crack that, even with relatively modest IRRs, like Matt was talking about, low, sort of 7 to 9%, that's not a return that lots of sectors would be happy with, but that will be enough if there's certainty on that return, that will be enough to unlock a huge amount of capital. And as soon as that flows in, I think we'll see the scale take off.
Great, thanks, Matt. Well, talking about demand and talking about the possibilities for water, I think it's a good time to come to Claire Green, who works for Yorkshire Water. And I know you can't speak entirely for all water companies, Claire, but you can share with us your perspectives. I think you've been working with peatlands for some years now. Can you share with us how water utilities are thinking about the potential of seeing peatlands as natural infrastructure alongside other choices for infrastructure, and buying peatland water benefits perhaps through long-term contracts? Is this in your vision at the moment? Where do you stand, or where do the companies stand in general?
Lovely, thanks. And yeah, thanks for the opportunity to sort of represent the water industry. Obviously, peatlands are really important for the water industry. I think about 70% of UK drinking water comes from catchments dominated by peatlands. So for Yorkshire Water, 45% of our water comes from peatland catchments from our reservoirs. So it's a really important source of us for water, both the quantity and the quality of that water. So it's particularly interesting to see, the real focus that we've got here on water and looking at water benefit accounting both for quality and quantity. In terms of long-term investments, I was going to talk a little bit around how it currently works for our regulatory regime, and then kind of with some of the changes. Obviously, we've got the Independent Water Commission and water reform, and kind of what may need to change in terms of how water industry is regulated to enable us to move from perhaps a funder of direct action into a buyer of water as an ecosystem service. So if I start off with kind of the Yorkshire water side of things, so we've been funding peatland restoration for around 15 years now, and that's primarily under a water quality driver under the Water Framework Directive, and it's all about no deterioration in raw water quality. And one of the big challenges that we have, particularly on our upland reservoir chains, and this is similar for other water companies, certainly in the north of England, is the amount of colour or dissolved organic carbon. As Matt said, that driver is very much around reducing the need for chemical and energy intensive infrastructure and ongoing operational costs with chemicals to remove that colour in the water. So it's very much ourselves working under environmental drivers that are set by the Environment Agency and Natural England, and then that helps us pull together 5-year plans for investment into peatland restoration to either avoid deterioration in raw water quality or invest in biodiversity. So we own quite a lot of our catchment land, about a third of our land, so we've got a big SSI improvement driver there as well. And then also support from Ofwat as well, and that gives us basically a regulatory output that we've got to deliver at the end of the 5-year period, and also the funding that can be secured through our customers to pay for that restoration activity. And so for the last 15 years, we've been doing that for a couple of partners, I think both on the call, Moors for the Future and Yorkshire Peat Partnership, to deliver that restoration activity. And actually our drivers have been water quality primarily, and biodiversity as well, SSI, NERC Act type drivers. Typically in the water industry, we sort of use those kind of investment regulatory drivers to do the improvements. So this 5-year period is actually our biggest 5-year period. We've got about 30 of our reservoir catchments that we're doing restoration activity, so it's quite significant investment for us in this. But again, it's very direct funding of peatland, and we will do things like match to the Nature for Climate funding as well, so that 25% match, a considerable amount of that comes from the water industry as well, and that obviously allows us to go sort of further and faster in terms of protecting these water sources. So going forward, if we look at the water reform, we're moving from having a separate environmental and economic regulator for water to a single water regulator, and also we're looking at systems operators as well at a regional and catchment level. So I think there's some great opportunities there, probably in two areas. So the first one is around the whole, can we do this larger at scale and over the longer term? As I described, we've got 30 separate catchment projects with funding for each of those. We're also doing that on a 5-yearly basis where we bid for extra funding. So it's not got that long-term, I suppose, ongoing requirement for, needing to go back again and again to, stabilise the peats, restore the biology, raise the water table. This takes, multiple years of interventions and ongoing work in these peatlands. And also it's interesting to kind of aggregate it. So in the north, we've got the Great North Bog, which is 6 of the northern peatland partners aggregating all of the upland peats. I think for England, it's about 92% of upland blanket bog is part of the Great North Bog. And when you talk about an investable proposition, I think that's at that sort of scale where potentially other private investors might be interested in investing on that. And again, from a regional system operator perspective, that's got the added challenge that often these contiguous peatlands sit at the top of multiple watershed boundaries. So how do we kind of manage that improvement across all of those multiple watersheds? I think the other benefit that moving to that could bring from a water company investment, and obviously recovery of those costs from water company customers. So moving from this 5-year investment program with regulatory outputs would be the fact that you could bring in other third parties that are vulnerable because of peatlands, to either fire, drought, flood risk downstream, other actors in the catchment that could have adverse impacts. If you can bring in additional investment and deliver at greater pace with more funding, then that is quite attractive, I think, from a water company perspective, and sort of bringing all those sources together. And also when we look forward, in Yorkshire, we're going to need another 312 million litres a day by 2050. So our peatlands currently provide about 0.5 billion litres of water a day. So it's significant amounts. I think the whole industry will need another 5 billion litres of water by 2055. So when you look at that, obviously there's work to do on demand reduction, leakage reduction, but we're going to be looking at, big new sources of water. But what can we do to store more water in the landscape? And that's really interesting when you start to look at, I suppose, regional systems planning and how looking at water quality, but quantity as well, bringing that into the equation, how that could really, you could see those regional system operators starting to drive some of that, and also looking at water resource planning as well for the future. And interestingly, I think there's quite a lot of research on the impacts of flooding and the benefits peatlands bring, but perhaps less around drought actually, in terms of providing that base load. And that would be really interesting to quantify, because in Yorkshire we were in drought last year, big challenge for us in terms of reservoir stocks, etc. So if we can retain more water in that landscape to reduce the risk of drought from climate change, then that's going to be a huge positive and reduce stress on water demand elsewhere in the region, from groundwaters, rivers, etc. So really interesting. So in terms of regulatory reform, I've talked a bit about the regional systems planner. I think in terms of economic regulation, because at the moment our investment into peatlands is classed as enhancement, and it's 5-yearly, and we have funding and we have regulatory outputs every 5 years associated with it. To move to more of a long-term funding, that would need discussions with our regulators around the economic regulation of that. So how could we move from this sort of 5-yearly enhancement funding to perhaps an ongoing operational cost that's ring-fenced towards this activity? So that's certainly something I'm quite interested in talking to the new regulators about how that might work. So it's quite an interesting space and very timely as report in terms of where we're at with water reform. So yeah, thank you.
Thank you very much, Claire. I think we heard a lot of enthusiasm there about scale and growing demand for the services that peatlands are requiring. So that speaks to some of the levers that Matt was mentioning. Thanks very much, Claire, for those insights. And I'd like now finally to come to Stephen, who is the European Investment Bank's principal advisor on nature and water. No stranger to peatlands. Done quite a bit of work in Ireland and the Baltics, I think. And of course, the bank is both an investment bank and a development bank linked to the EU's objectives. So What's your perspective, Stephen, as a development bank? How do you see the potential for peatlands as an institutional asset class?
Well, first of all, I mean, it's quite interesting. Now, you mentioned our previous involvement. I mean, as a development bank or bank, we're still a bank, I must say. So maybe just to recall why we even started looking at this space. Some of you may know, but EIB branded itself as a climate bank a few years ago. And prior to that, we ran the Natural Capital Financing Facility for several years. And at many levels, peatlands are unavoidable. If you want to be the climate bank, you have to have some opinion or some idea about peatlands because of their magnitude in terms of carbon storage. But our original interest really was through nature. We stumble across this amazing ecosystem up in northern Finland that gave an enormous biodiversity benefit for relatively little cost. That's actually how we entered into this. We were looking at advising a Finnish NGO on their peatland restoration program, and it saw incredible biodiversity gains over incredible short spaces of time through very simple measures. So that really caught our attention. It is just an extremely cost-effective way of achieving multiple benefits. And in their case, it was actually related to their rivers. They needed to fix these peatlands to improve the river water so that they can continue their traditional fishing. So it all comes together. The thing is, as a bank, ultimately our role is somehow to be in the space of repayable finance and revenues. And so it's not less challenging for a development bank per se to go into this space. And an institution like EIB is still looking for scale, for example. What I would say is that peatland is a relatively robust policy area because, you know, we've gone through the Green Deal wave and it's still there, but it's more happening at member state level, perhaps. What has emerged now as the language is resilience and competitiveness. And resilience takes us right back to water flooding, peatlands. So I really don't see the priorities shifting that terribly much on the ground. If we're trying to avoid droughts, flooding, and so on, I mean, we need these landscapes. The other thing about peatlands is that, as I've come to learn through my many contacts now with peatland experts, peatlands are a gliding scale. So much of peatland is being farmed, and many soils bear peatland-like characteristics. They have very high organic content, and it takes you straight into enormous tracts of land in Europe that are productive landscapes. And so there's a huge linkage into agriculture, and in fact, the challenges that agriculture are facing, droughts, groundwater table rising, and so on. So it's a super relevant topic for us still. But our role, at some level, you know, we buy into the need and the vision that peatlands will become more relevant and find their place alongside forests and agriculture and so on. But our role in the meantime is definitely in the market making. And I think what we bring to the table as a development bank, which is both a policy savvy and linked in institution and a bank, is that we are transactional, which means we cannot avoid but bring it down to very practical questions of where's the money coming from, who is the implementer, where's the scale, and oddly enough, our role in this European families is very much to keep those questions kind of in the center. So what are we actually doing? I mean, working very closely with the European Union, Commission, DG Environment, DG Klima, DG Agri, on these topics, on the nature restoration, on biodiversity credits, and so on and so forth. And really, I can only echo many of the things that Matt was saying. We are definitely trying to say, I mean, look, if the demand were there, the rest would follow. So let's focus efforts on creating that demand. But then the corollary is there are limited public budgets. How do you efficiently de-risk then? And it then comes down to two classes of instruments, really. I mean, we have the more classic instruments that we've used in the past, which is to try to support emerging actors. In this case, it will be aggregators and developers. But then there's the whole revenue side, which is largely unexplored in this sector, you know, where you can borrow from other sectors to provide that revenue certainty. We also strongly believe that the ultimate goal is a stronger regulatory environment for this. And we've seen that in other sectors like energy, for example, where it is possible to create new regulated revenue streams.
Well, thank you very much, Stephen, and thanks for mentioning the nature aspect right at the beginning and underlining that peatlands are really a robust option and scalable option, and that it's all about demand. I think this is very nice, the red lines through the report, if I may say. So looking at the time, I want to give space to our audience who've been putting quite a lot of interesting questions on the Q&A. But I want to just give Matt just a chance to come back in before I do move to the Q&A. Is there anything you would like to pick up from the roundtable that's been raised, Matt, and comment on before we move on, just briefly?
No, I think there's some great questions, so let's get into them. But thanks for everyone's comments, most of which I agree with entirely.
Okay, good to know. So one of them stood out for me. There's a question from Claire Cummins, which is asking about the insurance context. So nature-based solution for flooding protection or even prevention could also be in relation to drought risk. We haven't mentioned the insurance market yet. Does anyone on this roundtable panel have any insights or comment on that one?
I mean, Jane, very quickly, what I could say is insurers have to put aside a lot of expensive equity capital against their risks. Okay, and the more risk they have, the more that they have to put aside, and that costs money. They have to raise that in the capital markets. So any product that they can buy that reduces the risk profile of their liabilities is they can monetize that. They can pay for that because they're saving as much money, if not more, through their capital charges. So I completely, it's a great comment from, I think it was Claire. But yes, insurers are definitely one of the buyers of water benefits, or clearly flood attenuation benefits. But others on the panel may know more about that.
Yes, Stephen, please jump in.
I think insurers, so we've been trying to find some kind of modal cooperation with the insurance industry for several years. And you must say the traditional insurance model is difficult to work with because it's very short term. Actually, it's effectively annual. So it's actually very difficult to front load and monetize benefits that might accrue over a longer period of time. There might be indications that in some cases that's changing, but when it comes to actual actions on the ground, I mean, insurance companies are in the same boat as corporates or water companies or anyone, which is they can go into a landscape and they can support some actions, but there's the free rider problem, you might say. Everybody benefits, but they're the only investor. And that has limits in all these environments. There are so many examples of great first movers who reach a point where they're saying, and now others need to come into the picture. And I think, I think some of these landscape oriented programs, landscape oriented approaches, I think can actually try to de-risk things at appropriate scales and in collaborative ways, and with consortia of, you might say, supply chain actors and insurance companies, so that it can happen that way. That is one model. It is not an easy model, I have to say, because these things take time to come to fruition. What helps, of course, enormously is if we have a cornerstone funding source like a water company. I mean, that works very effectively, and we've seen it in many places where water companies are coming in with considerable contribution that can then trigger, you might say, other people to join the dance.
Yeah, great point. So collaborative de-risking in landscapes. And it leads into a couple of other questions came up about land ownership and how important this is. And I thought maybe Matthew and Claire might have something to say about that. So it was a specific question about Yorkshire Water. Are you only dealing with land that you can control, and how do you deal with land that you don't control? And maybe Matthew, you have a perspective as well. How, do you need to own the land in order to really move these projects forward?
Yeah.
So
I can go
Claire,
first.
go first.
Yeah,
If you like.
I can go first. Yeah. So in terms of Yorkshire Water, so our land ownership, we own about a third of our reservoir catchment land. The rest is under private non-Yorkshire Water ownership. And actually, the majority of our peatland restoration investment is on non-owned catchment land. So we work closely with the two peatland partners that I spoke with earlier to work with the landowners to enable us to be able to carry out the restoration activity. So that is a really important aspect of that, and obviously we've got to demonstrate that's delivered to be able to deliver the regulatory output and demonstrate that we've utilised customers' money to deliver what was required on that non-owned land. So yes, we don't purchase the land to do that restoration activity. It's very much working with the landowners and also them being willing as well to sort of participate in restoration activities.
Great. And Matthew?
Yeah, I mean, it's a great question, and I think it gets to a very real tension that there is there between economic rationalization and the tendency that might lead towards consolidation of land holdings, but I don't think that it needs to be that way. I think a project aggregator can aggregate between hundreds of different land ownerships, and we've seen some trailblazing examples, particularly up in Scotland on crofting land and common grazing land, where you've effectively got lots of tenants on a particular land holding. So you've got tenants and a landowner, and I'm not going to lie, it's definitely more complicated, but it's also, I'm sure everyone on this call would agree, worth it, because you don't want to see a conflict between peatland restoration and positive outcomes on the one hand and further concentration of land ownership on the other.
Yeah, thanks, Matthew. I think embracing the complexity. I mean, certainly it's going to be vital for tackling the water question. The whole catchment has to be in, otherwise it doesn't function. So there are ways to improve and ways to overcome these problems. So I want to just bring in one more question, then I'm going to come to each of the panelists and ask you for about 20-second vision on where we'll be in 10 years on this. So just a prior warning before we close. So there was a couple of questions from Dennis Kamperman. One is about can't we use the productive use of the restored peatlands as part of the case for attracting finance, so polludiculture, agriculture, and where on earth are we going to start with water credits, which don't exist yet nationally or internationally? Quick comment on that. I guess go to Matt on these ones.
I mean, on productive uses, so yeah, wet grazing, polludiculture, even although it's a bit more of a one-off if you're restoring forested peatlands, biochar, absolutely, you can all add to the revenue lines, and the more revenue you stack, the more investable the restoration is. I didn't quantify it because it's quite landscape specific. I think There's some good other studies coming out that the EIB are backing that look at some of those, but absolutely can be part of the business model. I suppose what I would say is that where there's productive use of land, there may also be some opportunity costs as well associated with that. So you have to factor that in. On water credits, how do we get there? I mean, that I think is the $1 million question that comes out of this.
Can I come in on that,
Yeah.
Matt?
Oh, sorry, Matthew. Yeah, please do.
Yeah. So water credits do exist, to be clear, but I think, and you see examples of this with corporates that have committed to water stewardship goals, working with, for instance, the Rivers Trust to generate replenished units, and their water credit is a meter cubed of water benefit delivered annually. So they do exist, but I think we want to be very, very careful not to be constrained by a credit type model, because I think that the tendency that's happened is because carbon credits work to an extent that there's this idea we should creditize everything, and that hasn't really worked for voluntary biodiversity, and it will only be one of many ways we can monetize water benefits. And I think insurance-based, risk and resilience-based business models for water are going to be vital. We've got to look at the water companies as utility providers as well. I don't think we necessarily want to constrain ourselves to thinking about a voluntary credit type system for water, though I acknowledge we do need a common standard unit. But luckily, unlike nature, water as a meter cubed, particularly if you apply some kind of multiplier to it in terms of its effectiveness, gives you a standard unit that everyone can use, whether they're talking about flood mitigation, drought alleviation, or cleaning water that's going through a constructed wetland. But so they do exist, and I think we just now need imagination within the water sector around which business models work best.
Great intervention. Thank you very much, Matthew. Yeah, there's no standard model. And also we don't want to divide everything up into nature, water, carbon, etc. We're looking for integrated solutions and standards and easy ways for those different benefits to be stacked together. So great comments there. Your 20 seconds has now gone down to 15 each. I'm going to come to you first, Sophie. So yeah, what's your vision on where we'll be in 10 years on this roadmap? Just really short, and then I'm going around.
Okay. Well, I mean, I think the roadmap provides a good vision. I really want to crack the water side of this. There is so much potential there. And ideally, we provide some sort of, government's able to provide some sort of revenue stabilization, so we can kind of de-risk those early investments, because obviously what we don't want to end up in is a sort of government continually underwriting forever, and we end up I think I saw one of the comments, end up in some sort of PFI type situation. Absolutely the vision we don't want to go down, and we need to be alive to that risk.
Great, thanks, Sophie. Matthew?
So my vision is more of a plea, which is that we are, aggressively pragmatic about this. I really, really worry we're going to be outpaced by climate change when it comes to restoring peatlands and wetland systems, particularly in Europe. And if we get our knickers in a twist over, semantic differences like we've seen with SBTI, we're going to miss these targets and we're not going to have a second chance. So we need to, we need to be really realistic at the pace at which this needs to happen. And we need to be incredibly enabling in all of our actions and incredibly coherent as a result. So please, can we look? The answers are out there. We're imagining them. We just need to actually speed things up now and stop putting, excessive blockers in the way that, while they are important, are not nearly as important as not tackling the monster that is climate change.
Great, thanks, Matthew. Claire, a few words from you.
Yeah, sure. So I think the long-term vision, in terms of providing water for society, peatlands are really important, and we need to see more naturally hydrologically functioning peatlands to secure long-term water supply, especially with climate change and growth. So particularly important for the water sector that are heavily reliant on peatlands. So I think in terms of vision, I think it is that thinking of the water as a system and the peatlands as part of that system, and how do we work with our regulatory regime to allow that long-term consistent funding into these peatlands, and look at opportunities for others to come in and also fund to do more quicker, to Matt's point about climate change. So that's kind of my long-term vision. Thank you.
Great, thanks. Stephen, what's your view? Can we bring this all together in the next decade?
Actually, Matthew, hey, you said something. I mean, I'd like to be a place where we're not the crazy ones, the others were. Because it's utter madness that all the efforts are going into harm and viewing landscapes as factors of production rather than as the basis for civilizations. And I actually honestly believe that whether people want it or not, they will learn that lesson over the next 10 years. And that will matter how we frame these discussions, right?
Great wisdom there, Stephen. Thanks. It's still a mindset issue. I agree. So thank you very much again to our roundtable speakers and to those who posted questions. There's still some which may be responded to separately. I'm sorry, we're running out of time now. So I want to hand over lastly back to Matt to mention the next steps, because this is just a beginning. It's not the end, launching this report. What's happening next? And then we'll close up. Thank you.
Thank you, Jane. Thanks all the panelists, and thanks for great questions from the audience. Look, I think Matthew Hayes said it well. To build this market, and markets are only as strong as their weakest link. We need all the ecosystem players, buyers, developers, investors, scientists, governments, and they've got to talk to each other all a lot more. And so I think the Landscape Finance Lab would like, together with partners like potentially the European Investment Bank, look at what are kind of a more practically focused action group that binds these bodies together looks like, and how they could practically sort of implement some of the actions in the roadmap and others. So we will consult on that in the next few weeks, and we also hope to have a follow-up event with the European Investment Bank in more like Q2, but by the summer, where we will go into that a bit more and sort of try and get some of those actions moving. So that's it. That's on next steps, and then we'll follow up on some of the questions we haven't answered. Thanks again for everyone for their interest, and hopefully this has been a useful contribution. So thanks from me as well.
Okay. So thank you, Matt. Congrats again to you and the Landscape Finance Lab for bringing this forward. I think the feeling is we need to move with urgency, and to quote Matthew, be aggressively pragmatic in moving this forward. So I think this session has helped to bring some of the key players together. It's just a start, so look out for the follow-up to this, and please keep in contact so we can move this agenda forward. Thanks again to the panel. Thanks again to everyone for joining. Until next time.
Thank you.